In this video, we will discuss the top 10 investment tips for beginners. Before starting this video, please like this video, and subscribe to our channel for the future updates. While investing, beginners face a lot of difficulties. So, we have carefully selected 10 tips on investing which will surely be helpful. 10. Robo-advisors are quite useful. Robo-advisors have been around for a decade and are focused on helping people to invest as simple and accessible as possible. In it, you won't need any prior investing experience. Robo-advisors use questions to identify your financial goals and risk tolerance and then use a low-cost, well-diversified portfolio of stocks and bonds to invest your money. These financial advisory firms use algorithms to automatically rebalance and tax optimize your portfolio continually. 9. Expanding. In a nutshell, diversifying your assets reduces the risk that the performance of a single investment will hurt the overall return on the investment. But you must have to be extra careful as investing is riskier. Investments in equity funds will be the most difficult to manage because of concerns about modifying them. The costs associated with investing in a lot of firms may be detrimental to the portfolio's overall performance. Because it is impossible to build a well-diversified portfolio with a small sum of money, you should be informed that you would only be able to invest in 1 or 2 companies at a start. 8. Acknowledge the risk. Accept the fact that it's a risky game. Think that what would be your reaction if you lost all or most of your investment money. First-time investors frequently make the mistake of believing they are more risk-tolerant than they are, so when riskier investments begin to decrease, they often panic and sell. Taking a deliberate approach to risk and return will ensure that you invest in accordance with your risk tolerance. 7. Consider gold. While considering gold, it is important to remember that its main purpose is money. There is no better idea to spend in gold than to have physical gold in your ownership. ETFs are another way to invest in gold. These are similar to mutual funds, but they only invest in gold. ETFs are great because they provide more liquidity. The ETF owns the actual physical gold, stores it, and keeps the share value. These shares can then be bought and sold on the stock market. With its ever-increasing demand, gold investment can be a very wise long-term investment. Companies that specialize in mining and refining will benefit from rising gold prices as well. 6. Start with small steps. Divide your investing objectives into manageable milestones. Investment success is difficult to achieve if you are continually disappointed by your lack of development. Begin small, with a modest monthly goal of saving $100 to invest. Then, while you're at it, search for methods to increase your budget by eliminating expenses or generating additional money. Start with something easy that you are familiar with. Before investing in any asset, you need to understand how it operates and the variables that impact it. Starting with something easy helps you to discover consistent success with something you grasp and develop as you learn about other chances. After you've laid the groundwork, you may start branching out. 5. Find a mentor. An investment mentor will assist you in answering your questions regarding the fragments of investing and will also assist you in developing your investing philosophy in the same way that a business mentor would assist you in developing your startup's mission, vision, and goals. So go find a mentor who has great financial control. There are also numerous forums where people may discuss ideas and tricks on how to achieve financial independence. 4. Go for a long run. The stock market is teeming with complicated ways and approaches. Many business owners have achieved little more than sticking to the fundamentals of the stock market. This often implies relying on funds to cover the vast majority of your portfolio's expenses and capital expenditures. Individual stocks should only be bought if the investor believes in the company's long-term growth potential and growth prospects, as well as its financial strength. The most important thing to remember when starting to invest in mutual funds or stocks is that you must refrain from looking at them. You should avoid the behavior of continuously reviewing how your stocks are performing multiple times a day. 3. Online brokers. Brokers are divided into 2 categories: full-service brokers and discount brokers. Full-service brokers, as the name implies, provide a comprehensive range of available brokerage services, as well as financial savings for retirement and medical, as well as general financial advice on a wide number of issues, among other things. Apart from that, because of the high demand for inexpensive brokers that have no or significantly lower minimum deposit requirements, You could be subject to higher restrictions and costs if you open an account with a broker who does not have a minimum deposit requirement. 2. Mutual funds are less risky. Investing in certain asset classes is done through mutual funds, which are actively managed pools of investor money. Investors that invest in mutual funds will pay some costs. This is the annual management cost ratio, which is calculated by the fund's management staff based on the number of assets. Ensure that you are aware of the fund's sales load before purchasing. The minimum account opening criterion allows for monthly mutual fund investments of as little as $50, depending on the fund. 1. Consider investing as your number one priority. Start by prioritizing your investment activities. Rather than waiting until the end of the month to invest, commit to invest earlier in the month. Imagine what your efforts could achieve for you, in the long run, to ensure that investing is a priority. Even a small increase in your retirement account withholding could have a big impact in the long run. The money will also be taken from your account before you receive your paycheck, so you won't be able to spend it before it's deposited into a savings account. So that's it for today's video. What do you think of our list? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notification before you go. Thanks for watching.